Wow, what a day, what a day. Well, we survived the CPI. Hope you made some money out there today, but it's back to work tonight. We got one more day left this week. Tomorrow is a very big day. We got Reaction Friday coming right around the corner. It's Thursday evening. We're getting ready for Friday's trading session, and you know me. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money on Friday. Before we jump in and get this party going tonight, we got a lot of great trades I want you guys to be ready for tomorrow. Before we jump in and get this thing going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoyed the video tonight, do me a favor as always, hit that like button and shoot me a holler, right? Give me a holler in the comments section. I'd love to hear from you. Either way, thanks for stopping by, supporting this channel, and tuning in tonight. But enough of the intro. Let's get ready for Friday. Got some big news tomorrow. Reaction Friday. Now, what do I mean by Reaction Friday? Well, of course, today was CPI Thursday. Of course, a lot of volatility, a lot of movement on the charts today. Tomorrow, everybody has a chance to come back to their desk with a good night's sleep. They know what the CPI number was, and tomorrow is where most professionals start to put their bigger positions into play. Reaction days, they follow any major news events, right? Non-farm payrolls, GDP, FOMC, and of course, the CPI. So in all reality, most professionals were probably trading a bit light today because of the extreme volatility. Tomorrow, people get back to work, really hard back to work tomorrow to finish off the week with a bang. You'll notice we get a lot of ranges on the charts right now. Ranges are one of my favorite types of markets right now. Everything's pretty bullish. Boy, I'll tell you, the key for tomorrow is traps. Traps are usually where the most money is made in ranges, looking for bear traps, below lows, looking for breakouts, going higher across pretty much all three of these markets. Now, you know it's not going to be that simple, right? You know it's not going to be as simple as buy the dip or buy the breakout. I do anticipate some bull traps above these highs. And I'll tell you right now, we'll talk about the game plan tonight. If you can learn to trade bull traps above these range highs, you can really put together a fantastic Friday to grow your account. So that's the type of stuff we're talking about tonight. Tons, long trades, short trades, breakouts, fake out breakouts. You will learn a ton tonight and hopefully give you a strategy to make some serious money here tomorrow. Now, of course, tomorrow's a Friday. It is pretty much your average Friday, right? Not a lot of major news tomorrow. You do want to be aware, though, that consumer sentiment number tomorrow, this is a sleeper. You know, part of that consumer sentiment number tomorrow at 10 o'clock Eastern time, one of the line items in that survey is going to be about inflation, right? Well, consumers think about inflation. Now, that will likely make that a very likely candidate for a big market moving event tomorrow around that 10 o'clock top of the hour. So obviously we'll trade whatever we get tomorrow, but if I had to guess, that would be a very good time to at least be paying attention tomorrow morning. And like I mentioned last night, I would not spend a moment of your valuable time looking at the news. Just be aware the news will be coming out at 10. And what do? We trade the reaction, right? It means nothing to us what that news comes out as. I don't even care what the news is. All I care about is the reaction because that's all that makes us money, right? The world is too complicated these days to be able to take trades off the news events. Anyways, consumer sentiment number, 10 o'clock Eastern time. That might be a little hidden catalyst for tomorrow, so you want to keep that on your radar. Back to our charts, though, because again, the money's made on the charts. The news is a great catalyst, so keep it in your mind, right? Keep it in the back of your pocket for tomorrow. Now, I'm going to cover all my favorite trades on each of these markets. If you like making money, I would definitely recommend you watch this video all the way to the end because I will teach different trade ideas, different advanced tactics. We'll talk about all kinds of different scenarios here tonight that will apply to all three of these markets. Let's go to the S&P first. We'll go S&P, we'll go Nasdaq, and of course we'll wrap up here tonight on the crude oil. Now, real quickly here, this is a 10,000 tick chart on the S&P. I did bump up the time frame here tonight because of the extreme volume, right? Over 2.2, 2.3 million contracts today. When it's high volume, I increase the tick charts so I can get a better view, right? Less noise, right? You'll find all the time frames in the upper left-hand corner. And also, too, just like in last night's video, I'm going to put a bunch of supporting time frames. I can't cover them all, right, in this video tonight. But if you want to see some slower time frames, some bigger picture time frames, I got a bunch more supporting charts, the description of the YouTube video. So grab those links and you'll see they'll really kind of go well along with this video here tonight. And don't forget, the S&P is very similar to the Nasdaq. The Nasdaq is similar to the S&P. So everything will really build off itself as we go through here tonight. All right, what's the most important thing about this chart right now? There are a bunch of key insights. We basically have a bull market overall right now into a trading range, right? It's a bull market into a trading range. And whenever we have a bull market into a trading range, we know that buyers are looking for bear traps below the low. We know that buyers are looking for bull breakouts going higher, right? Now, remember, we talked about earlier, a lot of traps. And so, of course, we'll talk about this. One of the key components in these ranges here tonight is what we call rotation off the high. So we're looking for a move down and a bull trap down here, right? Trapping in some of these bears. However, the way that the market goes up above the trading range and rotates down, it creates a lot of momentum. Just like we have the buyers right now rotating up off the low, right? This gives the buyers a lot of chances here to punch this thing going higher. But I want you to remember, when the market goes above a trading range and rotates back down, this creates a lot of momentum, and that will be a big theme that we're going to build on here today. In fact, it's one of the big differences between the Emini, the Nasdaq, and the crude oil, right? So that little aspect, that rotation off the high, is going to be a real big part of this, and that will help you time the best entries here for tomorrow. Now, my favorite trade in a bull market into a trading range is a move lower and a pop right back higher. I'm going to talk about that now. Later on in the video, we're going to cover a lot more about fake out breakouts off the highs and, of course, breakout patterns going higher here. So take some screenshots. Got any questions? Hit me up in the comments section right down below. Now, the key right now is as we go lower, right? As we go lower, we're buying off support levels. Now, the shallow pullback right now, you'll notice I have a channel right here, right, coming off that high, off that low. Remember, rotation off the low is a lot of bullish momentum here right now. Can I buy off that channel as we pull back? I can, but what's my problem right now? I'm right up around these highs. I'm right up into overhead resistance. So whenever I see a bull channel like this, right, shallow, bull channel in a bullish overall bias, I know I can take that trade long, but I have to focus on, you guessed it, bear traps. As we go lower, I need to anticipate those bears coming in and trying to short this thing. Look left, and you'll see exactly what happens in ranges. And to make sure I give myself an edge over those sellers, I need to give them the benefit of the doubt. Let them try once, let them try twice, and look for that bear trap entry. Now, of course, we talk a lot about trap entries in our free trading course. I know you guys are you're working your way through that free course right now. This is a great example, though, of a support level in an overall bull market. Keep that on your radar. Not my favorite trade in the world because, again, you're kind of right up around these highs, right? But that's the first one as we go down the ladder here. Now, as we go lower, the lower we get, the more attractive these trades become. But what's the cost? The cost is momentum, right? So as we go lower, it becomes a lot more attractive, and we have to deal with a lot more bears here. This is where the two-try rule comes in, right? Two-try rule means we're going to wait for that move down, and look over here, right? Look over here. right? See how they run lower, they pop back up, the bears once, the bears twice, and notice how this thing just stop runs and punches right back higher. That's the same exact setup I'm looking for over here. Rotation off the high, right? Lot of momentum, but a great spot to be a buyer. Let's see if we can get some of these bears coming in. Get them trying once, get them trying twice, and then think about it. Where are their stops, right? Their stops are sitting right above that high. And remember, buyers are going to buy low, and when the sellers get stopped out, the sellers by default, they become buyers as well, and these oftentimes will punch and run right back up into that trading range. We call these two-try failures. These are a little bit more of an advanced variation of the failure setup that we teach in the free trading course. And there's a lot of variations of this, and be aware, it could be here, it could be here, it could be here, right? Again, like I mentioned earlier, in the description, I'm going to give you guys a bunch of supporting documents, and you'll see kind of why I say, right, this area here, it may go a little bit deeper than simply the low of that trading range. Here's another variation of that I would recommend you keep on your radar. Let's say we make that run down again, but now the bears don't try twice and fail. They actually pull back and they retest that low. Even better. Because as we say, anytime we see a strong move in one direction, we expect a retest, right? So if the bears go back and double bottom off this, you can even get even more aggressive on the entry on this one. Again, use the two-try rule. Why the two-try rule? Because of all that momentum. Great place to be a buyer, but you pay a price for it in momentum. Bears once, bears twice. Where are my stops? And we're going to use that same two-try failure and buy right into those stop losses. Now, don't forget, this is where the fun begins, because now the amount we go above the range, go below the range, now we expect these ranges to rotate back and forth, right? Now, where do the buyers want to go? They want to go back other side of that range. They want to go back and take out that big high, right? That becomes the big objective. So now what do? Now we go out and we find a new channel. These are one of my favorite types of trades. If you were with us in the trade room this morning, you know how much I love these types of setups. We pop up, and what you want to do is go looking for that new channel at the high, find that channel low, and then what do we always say? Look for those prior swings and grab that first test, right? The first test is the best test. Now, I'm going to keep it simple here, right? This is a two-try failure, again, because of momentum. And then this could be any setup. It could be a bear trap, like I'm showing right now, right? It could be a bear trap, which is my favorite, below a prior swing. Could be a bear trap. Could be a seller failure pattern, a pullback combo, a strength move, right? You guys are learning these setups, the same setups you're learning in the free trading course, which reminds me, I know that most of you guys are making money with the free class right now. I love getting those screenshots every day. But if you're here for the first time right now, if you're one of the few folks who haven't taken the free course, learn the setups, right, got that roadmap, what I'll do is I'll put a link up there for you in the upper right hand corner. Grab that link, take that little free trading course, because the strategy that I teach will show you a very simple trick to know where the best winning trades will be each day, and I'll make it really easy to help you start making money on your own account with 4 simple entry patterns. If you're missing the best trades today, if you're not getting the results you want right now, what are you waiting for? Grab that link, take the free class. It is perfect for somebody trying to add another form of income, trying to retire, right? Trying to quit that job. So grab that link and you'll learn a lot more about things like this, right? These double bottoms, right? 2 tries, and then grabbing, right, those channels, right, as we go here. There's one more variation of this that I want to talk about, and then we'll talk about some breakdowns from there. A lot of times we get these big crushes down, but because we're so bullish on the 60-minute chart right now, and again, you will see on that supporting document that I mentioned before, a lot of times what happens is we don't even get a signal, right? The market just slams right back up again. We might not get a chance to use stops as fuel for a bear trap. In all reality, the best way to do this one now is if it pops up and begins to grind going higher, where does the market want to go? Right? Remember, it's a bear trap down here. They want to take out these highs overhead. Now find the entry. Now mark off those highs. Now find off that low. See how I do this? Mark up those prior swings, right? Prior swings are where traps live. Get above the 21 moving average. This is where failures live. Failure, pullback, strength, right? You guys know how it works. Trap, failure, pullback, strength. Again, if you're not understanding these setup ideas or these terms, not to worry. You'll learn that in that free trading course, right? So we know where the market wants to go at that point, top of the range, and definitely up to punch out those highs here. Now, by now, maybe you're wondering, what if this whole thing's one big bull trap, right? What if we roll lower? At what point could I start to sell this thing? When could I sell this thing as it goes lower? Well, again, when you look at those additional time frames I showed you, it's a little bit difficult to want to short as we go into these lows, right? It's also a bit difficult to want to short right now because we've got that channel right there. So it's not that easy to find good shorts at this point. I'm going to talk about that. I'm going to talk about the fake out breakout off the high. Don't you worry. We're going to get to that here in a second. But let's say, for example, though, something happens overnight. Who knows, right? Tomorrow is Reaction Friday. We make that strong run down. Now, at this point, if we pull back to that moving average, and again, bears once, bears twice, punch it right back up. But if the sellers, if they can hold that pullback and really jump, right? I mean, really jump out of that range. This is basically the proof that we need. We have a breakout pattern now, right? We call these 1, 2, 3 breakouts. Now, the way you want to trade this is if we do take out that big low, and for whatever reason, the bears pull back, right? They hold the pullback and they blast, all right? And this will be, I would say remarkable, but with all the bullishness right now, this will be a pretty big reversal, right? So I don't expect it, but my job is not to make predictions, right? Remember, we're not in the prediction business. When you make predictions, you only give yourself one or two ways to make money. When you prepare for the different scenarios that we're doing tonight, right, you give yourself virtually unlimited ways to make money, right? You're ready for tomorrow. Anyways, now, if they can go lower, hold that pullback, and remember, this has to be a very strong jump off of that moving average. If they don't, they're going to wind up right back up in that trading range. If they can, we're going to mark off that low. Right? We're going to mark off that high. It's a pretty simple idea, right? Same idea. Find that channel, right? And grab that first test. And again, this could be a bull trap. I love bull traps. It could be a buyer failure, a pullback combo. You'll see a lot of examples of those right inside of that free trading course. Where do we think the market might want to go if it was to get that big breakout going lower? There's a big old trading range down here. This does seem a little bit unrealistic right now, but that big range down there we spent, remember the end of, or the beginning of the year last year, right back in that range, you would think that's where the market would like to go back to. But again, right, and while I'm out here, look at these areas up here, right? I mean, this stuff is just begging to get bought right now. So, and again, you'll see more examples of this inside of that description, right? The links I gave you guys for some alternate time frames in the description. Okay, so I think we got a pretty good plan here right now as we go lower. Again, be very careful just shorting something like this because we are very bullish right now, and we got some channels kind of waiting down below. Now, let's kick this up a couple notches, all right? Let's kick this up. That's kind of that's the easy stuff. That's the puppy dog stuff down here, right? What if we break out? Or more importantly, what if we head fake? Right? Because like I mentioned earlier, that could really be a very big possibility here for tomorrow. I wouldn't put anything past these markets after that CPI number. And again, you know all the big lot traders, they're going to go full positions, right? Starting tomorrow, right? So they could easily pop it up, drop it back down, and really manipulate this thing with tons of traps here for tomorrow. I put a little note on there on the NASDAQ. And remember, guys, this could apply to the NASDAQ, the S&P, or the oil, all right? So whether you trade just the S&P, what I'm going to talk about right now will apply to all three of these markets here tonight. All right. So just watching the S&P analysis or just watching the Nasdaq analysis, in my eyes, you're really cutting yourself short, because all this analysis will build on itself. Anyways, all right. We talked about the move lower. All the stuff we just talked about off the low is the same thing on the S&P. Let's talk about if the market goes higher here. Okay. Now, the one that you got to be careful with, or the one you want to be aware of, because this is a trading range, we see a lot of times where, and again, we're very bullish right now and we're rotating off the low, right? That rotation off the low, it gives the buyers a hell of a shot for a breakout going higher. We have levels overhead at 29, a bunch of wide open space up overhead. You'll see more of the bigger picture levels linked up in the description of the video. Now, what would a fake out breakout look like here? A fake out breakout is a pretty simple idea. Most of the time, the ones you want to look for are going to be the V-top, right? The most common fake out breakouts will do this. They'll pop up. All of a sudden, there'll be this mass shot right back down because, again, ranges are magnets, right? They're magnets. It's resistance up overhead. Again, with all the big money traders getting back to their desks and going heavy tomorrow, they could easily lean into this, run it back down, and then pop it right back up. Okay, the markets are manipulated, all right? Don't be naive. If you had $100 billion, you would do the exact same thing. So how do we trade that? Let's see. Pops up, grinds back down, right? Pop and grind going lower. What you want in this situation is if it pops up and grinds back down again, you know how to trade this. The key is getting into it quickly. This is the secret to trading those fake out breakouts. Now, one example of this is a V-top. Now, like I always say, V-tops can be challenging because you really can't short them. I mean, you can if you want to, but man, oh man, shorting a bull breakout in an overall bull market, that's a gutsy trade, and that might come back to bite you before too long. Anyways, we pop up, we grind back down. The key on this is we've got to get into this bull trap. Okay, you really want a bull trap on the way back higher. Why do I say that? Because the lower we go, what's going to happen? The lower we go, the more buyers are waiting. What you've really got to be careful with on a fake out breakout high is like what we saw over here, right? Where you get that pop up. This, of course, on a faster time frame is a channel coming down. You want that original short. By the time you get down to these lows now, you're walking right into a trap right here. And this is tough. I recall being a new trader and being a victim of that trap because you're like, okay, we're bearish, right? You're like, okay, we're bearish. I'm waiting for a pullback. Oh, there's the pullback. Let's sell it. And then it goes, no, right? I call it the rope-a-dope in my trade room, right? So when you get these, long story short, if you get these V-tops like this, remember, your job is to grab that bull trap above that high off that new channel as early as you possibly can. Okay. The hard thing is again, as we go lower, if we rip up, pop, and grind down, if we're not able to get into up there, by the time this thing rolls down, this is not the trade you want right here, right? That's not where I want to be trading short, right? Because again, long-term bull bias, trend line coming in, right? Now remember, as I always tell you guys in the trade room, even a broken clock is right twice a day. You will see these pullbacks hold a couple times a week. But if you were to take every single one of them, you're not going to make money. Remember, right? Even a 30% winning trade is still going to be successful 30 out of 100 times. So don't be surprised if this one does hold. Okay, let's talk about this more. Okay, you'll see how we keep going through this. Now, another one. We pop up. Now, what do the buyers want here? The buyers want a breakout, right? Now, what's a breakout going to do? A breakout has to pull back to the 21 moving average. It has to hold the pullback and jump, right? That's the proof that we need for a breakout. We haven't seen it yet. So until we see proof of that pop, we call these 1, 2, 3 breakout patterns, right? Then we can start looking for long trades going higher. But think about this now, right? What if there are some inexperienced traders out there, and maybe they're reading a bit too much into the CPI number. A lot of people it's called, what was it called? It's conviction bias, right? When you make up your mind, everything turns into a buying opportunity. Anyways, I forget the term for it right now, but hopefully these buyers will come in, right, and try a couple times. Now remember, we're very, very bullish right now, so I can't be too aggressive on this. I need what's called a crown reversal pattern for that short. Okay, these are a little more difficult, right? These are a little more difficult. It's called confirmation bias, right? Conviction bias, confirmation bias, right? So if we get some buyers coming in here, right, and they're trying once, they're trying twice, they're trying to punch this thing out of that trading range. Remember, we're at resistance, right, above a range right now. If I can get these buyers roped in, get a nice strong signal right there, I want that trap. Okay, now real quickly, we need a trap for that short. Why? Because if I was to go out, right, and simply place a sell order right here, what'll happen a lot of times is it'll try to go lower, but then what happens? What happens as a bull market goes lower? Yeah, you got more buyers down here. So a lot of times the market will go up. You'll see once, you'll see twice. Remember, it's not a bear market, right? It's a bull market. If you try to short into stops right there, oftentimes you're walking right into buyers and they'll rip your head off, right? Well, not literally, obviously, right? But they'll punch this thing and they'll basically eat your lunch because you got more support down here. The way you avoid that little bear trap is you sell high. This is why I said when you're trying to go against the trend, you really have to short as high as you can, right? Because that way, even if they do come in and even if they do come in and buy that, by this point now, I've already got that first target hit. My stop's already moved down to point of entry. It protects me from selling low, okay? If you understand that part, what I'm talking about right now, you are 90% of the way in putting yourself in the shoes of the other side of the market. So we pop up, V-top, right? V-top, pop it down, get this thing early, right? Get it early. Or we pop up, buyers once, buyers twice, crown reversal, and back down. Remember, the lower we go, the more likely we are what? To be walking right into a trap down here, right? As we go lower, bears once, bears twice. This is the exact same game plan that we talked about on the S&P a few minutes ago, right? Same exact thing. Okay, so I really, really like that whole sequence here. And now you get a bit of an insight of how I'll be looking to potentially fade those highs or trade that rotation back and forth. Now we've got the $1,000 question. How do we trade a breakout? Right? Because we're very bullish right now. The CPI number came out. We had the first month-over-month decline in the core CPI in almost 2 years. That was good. There definitely was some red flags. I believe services, right? Services were skyrocketing in prices. Housing still very, very stingy with inflation. So it's not as rosy as the top line number looked. But hey, what's breakouts going to be? There are 3 breakout patterns. I'll be keeping, maybe 4. And as we talked about earlier this week, whenever we pop up and we break out of a range, again, bear traps, bear traps, bear traps. For example, strong pop up, right? Strong pop up, shallow pullback, higher high in price, traps, baby. We call these 2-try breakouts or 2-try traps. The key to this breakout pattern is the punch. Right? It's a punch. It's a shallow pullback. That shallow pullback doesn't allow the pullback traders into the market. The higher high, right? The higher high confirms it's not just a V-top back down again, right? So you have to have those components. It's a strong pop, right? It's a nice strong pop. It's a shallow pullback, right? That means the buyers still have their powder dry, right? The higher high in price confirms it's not just a pop in a head fake, right? This is a really, really reliable trade for a breakout, right? Another breakout is that pop and grind, right? We pop up and we start to grind, right? We grind. All the sellers, right? All the sellers who were getting fat and happy at the end of the year last year, they're still holding positions right now. If it pops and goes higher, they start liquidating their positions, and that's what causes things to flutter going higher, right? Pop and grinds are very common. Pop up, grind, right? Pop up, grind, grab that first pullback. You can see these everywhere once you start to look for them. Pop up, grind, right? Remember, this also applies to the S&P. This will apply to the oil later on in this video, right? There's your pop and grind right there. Now, again, I'm keeping it simple right now, right? This could be a bear trap. It could be get below the 21 moving average for a seller failure into a pullback combination, right? So if you're to zoom in kind of on that area, right? This is a 4,000 tick chart, right? Zoom in on it. Now, remind me again, where are the targets on these pop and grinds? Where are the targets on these? Remember, first leg, third leg, right? Anytime we have a breakout, we use the breakout leg as the measuring leg, okay? When I'm inside a range, I use the pendulum swing, right? The pendulum swing is the levels. Once I break out, though, we start going, okay, breakout leg, that's the measuring leg. Once we know where it pulls back, then we know how big that target is, and that will allow you to squeeze as much profit as you can out of that move. A third breakout pattern is that 1, 2, 3 breakout, right? We pop up. This one might not be a real strong move, right? We pop up, but now, right, the buyers don't try once, twice, and fail, right? They don't V-top and run back in. No, they pull back and they go, let's do this, right? Let's keep going. They jump, right? And they jump off the moving average. Now, when it comes to a 1, 2, 3 breakout, and again, I want to be very clear, right? We're at resistance above the range, okay? They have to show us proof here, right? Because if they don't, you'll get stuff like this, right? It'll try to go higher, but it's just, again, we're in a resistance with the range above, with the range below us, right? So if they can hold that pullback and really jump and separate off the 21 EMA, right? It'll start going like that. Then you got them. Mark off that high, mark off that low. The most important thing about these 1, 2, 3 breakouts, we don't need a strong jump through, but we need to hold the pullback and a strong jump off the moving average, okay? Whereas other ones, it's a strong pop and a grind, right? That first leg is more important than the first two I gave you earlier, okay? Now, one more that's very, very common is another bear trap. It's that breakout pullback, right? It's that breakout pullback. Think about all these levels of resistance. Now think of this market now popping up overnight, grinding back down here. Remember, anytime we see a strong pop higher, what do we expect? A pullback and a retest of that level, right? So now all of these resistance levels become support. And what happens is that nice grindy move down, and we just talked about this, right? On that fake out breakout. What happens is that if you chase it going lower, like I used to do 15 years ago when I was a rookie, right? Go in and go, perfect, there's my pullback. No, right? That's a bear trap right there. Why? We're overall bullish. Strong pop up. Anytime we see a strong pop higher in a bull market, be very, very careful when you get below that moving average, right? Now, if they hold the pullback and they blast going lower, that's a reversal, right? Back into the range. Possible, doesn't seem as likely, but again, my job is not to tell you what's likely or not likely. My job is to go over, these are the scenarios. If we do see this tomorrow, this is the most consistent way, the most reliable way to make money. If I can go out and find a channel off that, even better. Mwah! That is a beautiful breakout pullback. So now we've covered, quite a few variations, right, on this NASDAQ. So we know how to trade the fake out breakout. We know how to trade the breakout. We know how to trade the rolling over, and we know not to get trapped down here. All right. What do you think, by the way? Right? What do you think, by the way? I'd love to know what your feedback is. Are you enjoying the video? And also, too, if you're watching this video right now, 35 minutes or so into this video, you are the reason why I do these videos. I would love to know what your trading goals are. Why do you trade? What got you into the business? What gets you up early in the morning for this stuff? This is not an easy job, right? It looks easy, right? But right? It's uncomfortable. Why do you trade? What are you trying to accomplish in your own life, right? Is it, trying to buy a new house, go to school? What is it? I'd love to know. I always love hearing why you guys are working hard with me in our trade room, on our free trading course. I'd love to know what your kind of why is, if I can be a little corny with that, right? So give me a shout out there in the comment section. Last but not least here on the crude oil. Now, if you have been watching the video so far, you probably have a good idea what the best way to trade this. In a nutshell, we're bullish into a trading range. Okay. Now, right now, what's kind of cool about this one is there's not a lot of momentum giveaway. For example, right now, we haven't really gone up and crashed back down, right? Like we talked about earlier. Right now, we really have what I think the biggest thing right now on oil is we have that prior range. Let me grab this, get out of here, right? We get that prior range, right, underneath us. Oftentimes what happens in these situations is it'll pop up into a trading range, right? It'll break down almost as if to use this, right, as a breakout pullback, right? So that's a very, very likely scenario there. And again, on oil, I'll put some extra time frames for you guys down in the description of the YouTube video, because on oil we really could get a bit of a sharp pullback. You'll see why. You'll see why when you look at those slower time frames in the description here. So as we go lower, right, unless we really punch and go lower here, or unless we go up and then back down, at this point now it's a relatively simple game plan. I want to see a pullback. I want to get down to support levels. And like always, right, my job right now is to trap in the bears, see if we can get some bears to take the bait here, and then use their stops, right? Use their stops as fuel for a run back up. It's a simple failure pattern that you guys learn in the free trading course. Now remember, if we end up going up and then way back down again, what happens now? Momentum, right? Look at how much stronger that is now. So how do you do that one? It's the two try. 1, 2, then. Now, again, why 2 tries? Momentum, right? Momentum. And by the way, if you can see this coming, right? If you get this stuff right now, give me a hell yeah in the comment section below. I know how difficult this part of it is. So if you're picking up on that, I'm getting a bunch of emails right now from you guys going, "Oh, I get it." So if you're getting this stuff right now, I'd love to hear the feedback in the comment section. But anyways, trapping those bears, right? And then again, as we go higher, we look for that new channel, right? And we go out. And again, I'm going to keep it simple at this point, right? We've talked about this many times already. 2 try failure into that first test as we go. And again, right? And again, let's say, for example, now we go up, we roll lower, right? We go crushing it lower now. The bears pull back. They don't try twice and go. No. They hold it and they blast going lower. What's that? That's a breakout. That's a reversal, right? Because they're proving to us they want something more. Mark that low, mark that high. Don't miss that first test, right, off that channel. All right. And again, I'm keeping it simple here because we've covered a lot of the stuff already. And again, it all builds on itself, right? We go up. 1 try for the buyers, 2 try for the buyers, crown reversal. Remember, bull traps above the highs, because when we're bullish overall, what's going to happen, right? What will happen is it'll try to short that thing. It'll go lower. It'll pop back up. You'll get stopped out with a small stop. And the real pros who know how to trade this stuff will be waiting to eat your lunch. Look what happened right there, right? We pop up 1, 2, it goes lower, and are you surprised? Are you surprised where the bears actually took it lower? You shouldn't be, right? You shouldn't be, okay? Same exact pattern right there, right? We go up, V top, grind back down. You got this, right? Remember, on this reversal, what's the most important thing? Don't sell it down here, right? Don't sell it down here. You're walking into a trap. You got to get it off that rotation, get it quick, right? And sometimes you can't do it, right? Be aware of that. Sometimes it rips up, rips back down, and all you're doing is now getting that bottom. Okay. Remember, we don't trade FOMO, right? We don't trade, I think it's going to go here. We trade valid setups. If you're not getting consistency in your trades right now, it's because you're not using structure in your trading. What's a breakout look like? Right? Pops up, strong move, right? Remember on these ones, it's got to really punch, right? Really punch. Strong move, shallow pullback, higher high in price, not a good drawing on that. But trap, right? That trap would love to do this, right? That entry off the trend line, off the prior high, right? Or we take out the high, right? Not a huge pop, but now the buyers come in and go, okay, we're good, and they jump. Right? Remember, this leg might not be that strong, but that leg is strong. That's a breakout, 1, 2, 3 style breakout, right? Now mark off that channel, mark off those swings, and don't forget, first leg, third leg, right? And again, I'm drawing them long right now. If this was to go lower, hold the pullback and go. It's the same exact pattern except going lower, right? That's all it is. Again, we're very bullish right now, so I'm looking at this through that lens, okay? And you'll see those additional time frames I gave you in the description. You'll see what I'm talking about, right? There's a lot of great spots up there. Or last one, right? Pops up, grinds, goes higher, right? Pop and grind, get that, right? Get that channel trap right there. Or we use this area now, become support. We pop up, right? We start to grind back down again, right? Strong move up, strong move up for the bulls, right? Wants to retest. We trap in those rookies who unfortunately are not watching tonight's video, and we take, right? We run those stops, right? So hopefully by now you can see lots of traps, right? Lots of traps for tomorrow. Remember, if the easiest money you're going to make in trading is when you are on the right side of momentum or range rotation, and you can trap in and use stops as fuel. All right, guys. Boy, we covered a lot here tonight. I know this stuff is difficult. It's a lot of information at first, but that's why we have a trade room, right? That's why we get together every morning and trade this stuff together. If you're looking for a place to come out and learn this and trade along with us, if you're not getting the results, again, I would recommend grab that free trading course. The links are down in the description. Grab the free trading course, get the ball moving, right? That'll show you the tools you need to get started. And soon enough, I think I'll see you trading with us sometime soon in our trade room every morning at 8 o'clock Eastern time. Please don't forget too, the easiest way to get help is to call the office or use live chat, right? You can pretty much get us on live chat or via telephone or email. You can pretty much always get us. I would love to hear from you in the comment section below. I'd love to know why you invest the time to learn this. What's your goal with trading? I'd love to know how you did today and what you're enjoying about it, or what I can do to make these videos even better. Now, don't forget to Monday is a holiday, right? Monday is a holiday. I forgot to mention that earlier. So there'll be no trade room on Monday. There'll be no video on Monday night. We'll come back and we'll get back after it on Tuesday. All right, guys? So a very happy holiday weekend to you guys. If I don't see you tomorrow morning, right, in the trade room, hope you guys learned a bunch. Hope you use it to earn a bunch for tomorrow on Reaction Friday. And again, keep in touch, right? Don't be a stranger. I'm always here to help out if you have any questions along the way. Enjoy the weekend. If I don't see you guys tomorrow, and we'll see you guys after the holiday on Tuesday evening. All right, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye-bye for now.